Hello again, Forex Academy subscribers and members. And this is John. I'm with you again to finish, not to finish, but to continue our video series in trading methodology and money management. And I think it's important to go over what a method or a strategy is, and that's what we're going to do in this video. We're going to go over I'm going over this particular system because, one, it helped me become profitable, and two, I've had a lot of other clients and people find a lot of success with it. It's a tried and true method. It is very, very easy to follow. Well, I should say the rules are easy to follow. The trader following them, that is up to you, and oftentimes, even with a winning system, people fail to follow it because they don't trust it. But saying that, we're going to it's a trading method that every new trader should learn, and it's the Ichimoku Kinko Hayo, or we just call it the Ichimoku system. And without going into a lot of details, we don't have to get into the history of it and all the nitty gritty here. Ichimoku, it's an indicator that it's called an indicator on most charting software, and it's actually not an indicator. It's a trading system all under one roof. Very easy to understand rules, and there's a lot of components. Well, there's not a lot of components, but there's more components than just a single indicator inside the Ichimoku system. All right, and so we have those four components here. We have the Tenkan-sen, the Kijin-sen, the Kumo, and the Chikou-span. Now those are the Japanese names, because Ichimoku itself means the market at a glance, or at a glance at the market, and these are the components. We'll look at these here graphically. We can see that we have, here's the candlesticks, and we see these kind of blobs and these other lines. So what we're focusing on here is that the conversion line is the blue line, the baseline is the red line, the lagging span is this green line, and then we have the clouds here, green and red. Those are the Kumo, and the Kumo or the cloud. And the cloud is probably what the Ichimoku system is most known for, is the cloud. Now, the most important part of the Ichimoku system is that it tells us when not to trade. And the most important rule is that if price is inside the cloud, we do not take a trade. I should change that where it says that doesn't go. There we go. Now the English is better. If price is inside the cloud, we do not take a trade. All right. Now, let's look at this though on the chart. Okay, we've got we'll use the euro dollar. Euro dollar is a good chart to use. And we have the Ichimoku system. Okay. And we see this blue line. Actually, I'm going to make these a little thicker so they're easier to spot. And if you've gone over moving averages, you know what moving averages are? These also look like moving averages, and they are, but they're not. They take the mid of the past candlesticks and not the close. Most moving averages, if you've seen moving average systems or just kind of a moving average in general, you'll know that by default, most of the time they do the close. Whereas in the Ichimoku system, it takes the midpoint of the past candlesticks. In fact, if we were just to take moving average, and the conversion line is a 9 period, and so if we did the same thing here and we made it, oh yeah, there it is, we can see it's a little different, right? Not a crazy amount different, but it is a little different. And it is a little bit more sensitive. It's a much more effective way, I think, to follow the system. And those are the default settings. And some people may ask, well, why are the settings why is there a 9 base period, 26, 52, 26? There's a numerical system associated with with the Ichimoku system. There's a time-based system as well, but for the purposes of this video and understanding the method and the rules, we just need to know that these are the default settings. And the Japanese, when the gentleman who created this system worked on it for a few decades, the Japanese markets had a 6-day trading period, so that's why these time defaults are reflected the way they are. Now, we need to know, well, if the main rule is that in this method that we do not take a trade of prices in the cloud. When do we take a trade? Well, we see we have both of these lines, all three lines and price, they're down below. Where do we end up taking a trade here? Well, first, it's going to help us to kind of get a grasp of how are these lines formed, especially the cloud and the conversion line, or the lagging span. So what I'm going to do is at first I'm going to get rid of the lagging span, and I'm going to get rid of price for a moment. So all we see now are the conversion line and the baseline. Conversion line is the blue, it's the fast one. The baseline is the slower, it's the red. Okay, if we look at the cloud, we can see that the cloud is just these two lines moved forward in time. And the cloud changes colors according to where the conversion line is relative to the baseline. So right now the cloud is red because the conversion line is below the baseline. All right, so this is moved forward 52 periods. All right, so the current activity of the the conversion line and the baseline is moved forward in time 52 periods. All right, and then back here we can see that the cloud is green because the conversion line is above the baseline. All right, you can see the same shapes form as we move forward. There's a little bit of a deviation in the graphic component here, but that's all we need to know. The next one that we want to take a look at is the lagging span. All right, and the lagging span very easily, that is just the current price action moved backwards 26 periods. So if we were to change, instead of looking at a candlestick chart, if we want to take a line chart, that's what we're looking at. See, we're just looking at the current price action being mirrored back 26 time periods. Okay, and the reason for that's going to become apparent. In fact, there's a lot of Ichimoku trading systems and guides that totally remove the lagging span or the Chico span out of the system, and I think that is an error because I think this is the secret hidden weapon of the system. So we'll go back to candlesticks. We'll put everything else back on the chart. Okay, and as we're looking, we see that, oh, you know what? I got to get everything else in there. I got to get the cloud back on. Can't talk about the Ichimoku system without the cloud. We want to talk about the rules for entry and exit and short or long. All right, so there's 4 rules that we need to follow to go, we'll say 4 rules to go long. All right, and I'm going to hit market replay. I'm going to set this back over here. There we go. And so to take a long trade, we need the following conditions met. We need the conversion line greater than the baseline, which it is. We need the cloud ahead to be green, which it is. We need price above the cloud, and then finally we need the lagging span to be above the cloud. So if I was trading this and I was thinking, okay, well, I can't take a trade now because I'm sitting inside the cloud. I know my rules are if price is inside the cloud, I don't take a trade. And so I'm looking at this. I see I have some conditions met for going long, but not quite. Okay, now I'm looking at this. What's happening? The cloud ahead is green. Price is outside of the cloud. The conversion line is less than the baseline, but the lagging span is about to break out. I'm still waiting for all my conditions to be met. And there it is right there. You know what? Actually, let's pause this. Let's Let's hit play one more time and we'll watch this play out. Waiting for price and all the other conditions to be met to go long. Once that happens, we can hit pause. Okay. Now, this is where I would have entered a long trade at the close of this candlestick. And why? The conversion line is greater than the baseline. The cloud ahead is green. And the lagging span broke above the cloud. Generally, the last thing that we will see happen in order to give us the final signal for our trade entry is when the lagging span breaks above the cloud. Then we'll hit play. Would have taken a long there at 119.41. And we can see how many pips we would have gotten, and price comes back down and starts to trade, comes back up. We can see in an uptrend that the conversion line and the baseline often act as areas of support. So when price returns to those lines, we often see price finding some type of supportive buying or buying at those levels, right? And we're still bullish here. We start to want to take profit. We'll take profit when waiting for it. Right here. There's two ways to determine whether or not you're going to take profit. That's if you see the lagging span start to trade inside the candlesticks, or if you see the conversion line cross below the baseline. That's probably when you want to exit your long position, okay? Because that is telling us, both of these signals are telling us that there's some inherent weakness in the trend and that it may not last. I know this is all past performance, but I'm actually not sure where we're at as far as what happens here, just looking at this. So we can see that we re-entered the cloud. And again, this is telling us, this is great about the Ichimoku system. It tells us when not to trade. And we can see on the daily chart, at least, it's telling us that there's not a lot of great trade opportunities. This is just a sign of consolidation, indecision, really no clear path, one direction at all. And now we are looking at a condition where we may be looking to go short. And so what are our rules for taking a short in the Ichimoku system? Well, it's just the inverse of going long. We need the conversion line below the baseline, which it is. The blue is below the red. The cloud ahead is red, which it is. We need price below the cloud, which it is. And we need the lagging span to break out below the cloud, which it did. And so we would take our short entry right here. This is based on the daily chart. So if you're a swing trader, position trader, these are the kind of daily charts are your entry tools. All right, and we can see that the trend is pretty strong there. When we came up to the conversion line, what did we see? We saw selling. Continued selling pressure, Really no sign of weakness in the trend yet. Lagging span is still below price. We're still moving down. We're still selling as we approach that conversion line. And there we are currently. All right. That is our current price action. So those are quickly the rules of taking a trade long and short. And here's the deal. This is why I'm putting this in here along with the trading methodologies, because there are 4 rules you have to follow. 4 rules that you have to follow. And that's the only ones you have to follow for right now. If you follow just those 4 rules, you will have profitable trades. But if you could see during the replay, and I encourage you to use the market replay. Try this out yourself. Go to some random point in time and just kind of, in your mind picture when you would have taken a trade following the Ichimoku system. Because the Ichimoku system tells you when not to take a trade. There are 4 pieces of criteria for entering a long or a short trade. And as long as you wait for them, you have a high probability of entering in a profitable trade. And you have a high probability of being in a losing trade if you violate any of those rules. All right? Because the point I'm trying to make here is that if you don't follow the rules of a system that is proven to make money and is proven to be profitable, then you will never be profitable in the market. You will never be able to create a system catered to yourself. You'll never be able to create a system that'll be winnable. If you can't follow the Ichimoku system follow the rules, to the T, then you will fail as a trader, because this is a very easy, simple system to trade. The only thing holding you back is your own fear and anxiety of money being on the table, and you afraid of it of a losing trade. You're going to have losing trades. In fact, I've said this many times in during the webinars and in the psychology videos, is that you need to expect that money to be gone when you put on that trade. You should not assume that you are going to make a profitable trade. You should enter the trade with the highest probability of profit, but you should never expect to have money at the end of a trade, because that makes you afraid of it, that makes you nervous of it, that makes you protective of it, of your position, and it will keep you from making the right choices. So you open up a trade, assume that money is gone already. Oh, one thing I did need to note is that the stops. If we're short here, we always put our stop slightly above the cloud. If we're taking a long trade, we always put our stop slightly below the cloud. All right? So as we're moving up in price, we're keeping our profit. Okay? And there's plenty of material out there on the Ichimoku system. There's some fantastic books. There's fantastic videos. Just make sure you're vetting the information appropriately, or even ask us on the Forex Academy site. This is a time-tested method that will yield you profit, but you have to follow the method appropriately. And you can use it on any time frame. Obviously, on daily charts, it's going to work better than it does on 4-hour charts. And 4-hour charts is going to work better than 1-hour charts, and 1-hour charts are going to work better than 15-minute charts. But if you like to trade fast, but not like 10-minute charts, 15-minute chart Ichimoku system is not a bad way to trade on a 15-minute chart. There's a lot more chop you can see. You get a lot of false signals, but if you keep looking at the 15-minute chart and the hourly chart, when we get into more trade strategies, I'll show you how to set up a multiple time frame Ichimoku system. That's a pretty common and well-known way to trade, is multiple time frames of the Ichimoku system cloud. But anyways, I'm getting a little off track there. But if you follow this system, this method, you will earn profit. And then after you have learned to trust a system that has been able to make money for you, then you will be much more comfortable learning about other indicators and other systems. But for the first thing that you ever do is just trade the Ichimoku system. And you know what? Maybe you never have to learn how to trade anything else ever again, because there are a lot of profitable traders out there that use only the Ichimoku system. I'm a Ganist. I don't know if you've ever seen my charts before, but here's gold. But even though this looks really super complicated, this is an advanced form of analysis, Gann's market geometry. But you know what? Look at what I have up here. I have 3 different Ichimoku timeframes because I trust the Ichimoku system will make me money. I trust the trade signals that the Ichimoku system gives off. I trade it. I use it. So with that, I hope you found this video helpful, and I hope you found it something of value. And I look forward to speaking with you in our next videos. Excuse me. Thank you. Bye-bye.